there has been some quite interesting events that has been taking place this last week, which we need to be aware of. And we're doing that. Yes, they are fundamental news and stuff like that, but we need to look at them so that we can decide how this information will affect the market, so we can decide if it's reacting positively to the news or if it's reacting negatively to the news. First of all, we're going to discuss the euro and what's happening in Europe. Well, first of all, we all know what Cyprus what's been going on with Cyprus, and we were hoping, or the hope was that after the sequestration of the deposits and stuff like that, that Cyprus would move away from being in the center stage. But unfortunately, that was not the case, because yesterday, or the day before yesterday actually, the number which was needed to cover the banking crisis in Cyprus, which was supposedly a meager €5 billion, has now risen to about 13 billion euros. And the Troika has decided that Cyprus need to raise more funds to cover that, and the Cyprus central banks has decided to sell about 12.9 tons of its gold reserves, which it held in order to cover that $13 trillion in order to secure the financing. A draft of the bailout document reportedly seen on the Financial Times said that the Cypriot authorities have committed to sell the excess amount of gold reserves owned by the Republic. What's concerning about this is that this is something that is not going to be limited only to Cyprus, because if the EU or the powers to be in the EU are deciding that Cyprus is forced to sell its gold reserves in order to cover its deficit, then what would be the case with Portugal, Spain, and the other countries? The other country that's coming into center stage right now is Slovenia. And the problem with Slovenia banking system is that they do also have a big banking situation, or a big banking problem that eventually is going to surface and come to the top. Germany right now is not in a position, especially with the elections that's coming up, is not in a position to actually consider bailing out any more of the European states. The German taxpayer is not willing anymore to pay to cover anybody else's debts. They did pay, and they were able to up the ante and step up to the plate way back when they were reuniting the East Germany, and they paid up in order to do that, but they were reuniting families. They are not supposed, they don't feel that it is their duty to pay to cover the debts of people that are, for a lack of a better term, tax cheats, and they're trying to avoid paying their own taxes, while in Germany they pay their taxes. When I say tax cheats, you want to look at what happened, what's going on in Italy. There was a report that came out during last week is that in Italy, which you know has about 60 million, the population of Italy is about 60 million, 27 million of those Italian nationals have declared that their tax income, their yearly tax revenue, is 20,000 euros or less. Now, this is a staggering number if you assume that 60% or about 50% of the population, if you take away the young and the people that are not eligible to pay taxes, and you take also the elderly or the old people that are supposedly on retirement, that you would see that 60% of the people in Italy are actually, they cannot be making 20,000 euros or less. Anyway, having said that, there are certain serious issues that are underlining the euro, plus the ECB, or the monetary arm of the ECB, was meeting yesterday and today in Dublin, trying to discuss the situation in Cyprus, trying to discuss the situation in Greece, trying to discuss what Germany is going to do. And as of this moment, nothing has been reported out as a summary of what they are planning to do. With that said, it would be assumed that the situation with the euro seems to be negative or dire. But with all that said, this is what has been happening in the euro during the last week. It has pushing higher. It came back above the 130 or 19, and on Friday, when the news came out that about Cyprus selling the gold, what we have seen here is just a kind of a pullback with we can call it an inside day. So in short, we can say that this is bad news, and this is fairly neutral to some kind of a positive action. On the other, if we're going to look at Japan and the Japanese yen, we have seen that on Friday we had quite a pullback in the Japanese yen. And we've seen, for example, something like the pound yen has pulled back about 150 pips. The euro yen came back also, the dollar yen. But if we are going to look at the news that's coming out of Japan, and again, I'm just giving you these news because now we are in a unique situation right now. There is a lot of political events that's going on. It is kind of a fluid situation between what's happening in Europe and what's happening in Japan, and we need to be aware of the reactions in the price. Anyway, last week the governor of the Bank of Japan held a press conference, and he appeared quite confident about his policies, decisions, and he was wholly intent on following through on what he said regarding a massive expansion of the Bank of Japan's monetary base and an intent upon creating a 2% inflation over there. He began by saying that the market's collective reaction to the virtual ease, the bulge of the ease, he said, was quite within expectations. And he said that the bank will indeed take whatever actions that shall be necessary to double, and this is the key word here, to double Japan's money supply over the next 2 years. And he also stated that a strong Japanese stock market and the weakness of the Japanese yen, he considered both of those to be quite positive. He also stated that the quantitative easing and the qualitative easing this time around will probably achieve the intended goal of having a 2% inflation. And if you look at the chart, as you can see here, we had a kind of a snagback in the euro on Friday after these comments. But again, this is a typical Friday reaction, which means that people usually try to take profits before the weekend. So if it was a different day than Friday, we could have looked at this pullback or this snapback in the Japanese yen in a different way. Last but not least is the Australian dollar. And in Australia, last week we had the unemployment that came out, and it was the people filing for unemployment has risen tremendously, and I think the number was the average unemployment was supposed to be around 5.4% of the population. This week the number has risen to 5.6, and that would imply that the Australian government should begin to look towards easing some of its financials, policies, if you will. And you can see that the reaction that took place in the Aussie dollar on Friday, as you can see that after the unemployment number came up, the Australian dollar came down from 105.50 all the way down to about the 104.73 to close the week at the 105. Okay, so bearing in mind basically what I just stated about the three major currencies, leaving the dollar now for the time being aside, we can see that we had some positive or kind of neutral to positive reaction in the euro, kind of, let's say, neutral reaction as far as the yen, plus we're having some negative reaction in the Australian dollar. Coming to the US dollar, we still have the currency, the budget situation going on into the States, and we have been kind of drifting lower a little bit, but the numbers that are coming out of the States, the unemployment number that came out of the States was quite positive. And with that said, just giving you like a background of what's happening economically, or a brief summary of, not as complete as I like, because I don't like to delve too much in the fundamental stuff because it might affect our judgment, but it's important to be aware of what is going on so that it can help us making our technical decision. So as we start every week, we're starting with the US dollar. We closed the week at 82.40. We're still above the 81.89. If you look at the weekly chart, it's pretty much an inside week. We have the previous weekly low was 82.31. We have traded below that this week. We have traded at a low of 81.14, and then we came back and closed above the prior weekly low. That would imply or give us an initial buy signal. So that is that kind of close. Again, this is a narrow range, 4-week or a 6-week narrow range. We have triggered a buy signal on the US dollar, and you can see that again this is the buy signal. If you look at the daily chart, we have tested the previous daily low, Thursday's low, and we closed above 2 days low, 4 days low, and actually the 3 days low. So we actually on a daily base we have a 3 or 4 buy signals coming up together. So with that, we are going to be positive on the US dollar, and we'll be looking at being buyers of the US dollar. So we'll be looking at being buyers of the US dollar. The next one we're going to look at, again, because it is fairly an easy trade, and this is a trade that all of us need to be involved in. And the term or the discussion or the situation we're in, we are in a bear market in the yen. And with that, we should sit in that trade, sit on our hands and enjoy it. So having one day bounce up like this should not negate all of that. Yes, we had a big pullback in the pound yen, we had a big pullback in the euro yen, we had also quite a pullback in the dollar, but that is to me more predicated upon people trying to take profits before the end of the week. So putting the weekly chart for the Japanese yen, the picture now becomes much more clearer. All what we had, we're still below the previous day weekly low. We just came back to the mid-range of the week. So nothing has changed in our bearish perspective, and we should be looking towards it easily within testing the 93.12, which is the supposedly the 2.618 extension. And keep in mind, that's why I read to you the comments of the Japanese governor of the Bank of Japan, is that he is quite optimistic. He feels that everything, that the reactions to the market is quite positive, and he is welcoming this reaction, and he's welcoming the rise in the Nikkei and into the stock market. And these are positive events. This means that they are going to expand, and he's willing to expand the monetary base of the Bank of Japan, double it in the 2 years. So again, these kind of volatilities or these kind of pullbacks should not phase us. These are very long-term trades that we should take them and sit in them. And when you are fortunate enough to catch a trend, you sit on your hands. You stand up, put your hands underneath you, and you sit on them. And we have to learn to accept the pullbacks or the profit taking, which are with the people that are short-term. They give you an opportunity to add to more of your short positions. So this is for us a gift to begin to add to our short positions. We're going to time our entry in adding more to our short position by when we start going into the daily and into the actual spot pairs. Okay, so we are going to maintain the bearishness of the euro, and we're going to time ourselves into adding up. If you look at the Australian dollar, the Aussie as an index is pretty much near an all-time high, and as I have explained to you before, the Aussie and the CAD are primarily the two currencies that are paying some sort of dividend, or where you do not have a negative cost of money. You don't have you don't have a negative cost for saving. When you put your money there, you're getting something in return, which is not the case with the euro, which is not the case in the United States or in Britain for that matter. So having said that, this reaction that we have here is a result, if you will, of the hard or the tough economic situation. Not tough, I don't want to say tough, but again, to the slightly bad numbers that's coming out of Australia. They're having a big influx of cash coming into them, yet the world now, Europe is not demanding. There is a lack of demand that's coming out of Europe. There is also a lack of demand that's coming out of China. So that in a way should be slightly dampening the Aussie. But with that said, this is not particularly a negative thing for the Aussie. As you can see, the weekly close, when it comes up, as you can see, the weekly close is actually quite positive. We are still above the 2 weekly high, which is 104.38. We closed the week at 104.53. We closed above the 2 weekly high, which is 104.32. We had two of them pretty much the same, and the 3 weekly high is 103.94. So with that, we're going to remain positive on the Aussie, but this positiveness on the Aussie, we should be pairing it with the weak currency. So we're going to pair it primarily with the Japanese yen. So we're going to focus on the Aussie yen, if you will. Now we go to the euro. Just waiting for the chart to come up. Okay. With all the negative events that's been happening in the euro, you can see that with Friday we had a decline. But if you look at that on a technical base, this is actually a buy signal, because we traded below Thursday's low, we traded below 2 days low, and we're pretty much closing the week at 103.85. So we are going to treat that as a news trade. We're having bad news and we're having good action. So we're going to be neutral to slightly positive on the euro. And I would believe that the key to the decline that we've seen here in the euro was pretty much the sell-off that took place in the yen pairs, or in the covering of the yen pairs, in selling taking profits in the yen pairs over on Friday. Now we're going to go to the British pound. The weekly data is coming up, but anyway, we can visualize it. It is still a positive week for the pound, but we are still, or we are technically in a bear market. I mean, the pound is still in a bear market. We do not have as you can see, we closed the week at 153.38. The 5-day high is 153.57, so that triggers the first sell for us as a first sell signal. The 4-daily high is 153.46, so pretty much we have two sell signals. The 3-daily high is 153.37, so we have triggered 4 sell signals, and the 2-day high, we're actually sitting at it right now. So that decline that we see on Friday has triggered 4 sell signals or 3 sell signals, and we're sitting now on the 4th. So we're going to be slightly bearish on the pound, and we're going to be looking at, again, taking any sell signal from the pound, if you will, but we're going to see what happens with the Japanese yen. Looking at the Swiss franc, this is a tough one. It has come back and traded above the 106.74, which was a big structural point, and that was considered for us the beginning of the downtrend. But having it to come back like this, again, it could be the situation that's happening with the euro. Sorry guys, just I think a drop in the okay, just Guy, Khalid or somebody, please use Skype if there is anything. If the screen is not showing or something, please give me a heads up. Can you see me all right? I just want to give me a heads up. Can you see my screen and can you hear me well, please? Hello, can you hear me well? No, it should be the Swiss franc. It should be the Swiss franc, guys. Okay, I'll how about now? Is it now the Swiss franc? Okay, good. Thank you. Okay, so with that said, what we can see here, this is what we have right now, and this is when I say it's interesting, we're getting higher highs all the way up, and we are also getting higher lows. And this is what's known as a flag. You can see that there is your mast, if you will, and that is the flag. So when we're looking at a flag and looking at those dailies, the closes. So Friday closes a sell signal. It's also below the 2-day high, and it's sitting at the 3-day high. The 3-day high here is 107.52. We closed the week at 107.63. So pretty much have two sell signals. It is a flag, and a flag in this case should break in the direction of the preceding trend. And in this case, the preceding trend is to the downside. So we should be expecting the flag to break down, but within this range, within this Swiss being within the range of the flag, we want to make sure that it breaks below the low before we actually can take a sell signal. So we're going to be bearish to neutral. So we're going to be neutral to negative on the Swiss franc. So this is going to be our situation, because again we're in the flag is just, it's considered a price acceptance zone. It is considered a neutral zone. It's giving us higher lows and it's giving us higher highs, but the closes are weakening, so it's giving us weaker closes, and this is what concerns us, is the weaker closes. But until we trigger a sell signal, we're still going to be neutral towards the Swiss franc. Again, I'm assuming they are trying to figure out what's happening with the euro. The next one we're going to look at is the Canadian, and the CAD is still technically, like what we have discussed, in a bear market until it goes above the 98.94. We did have a sell-off on Friday, so we're going to be looking at the Canadian again to resume its direction to the downside, which is the, I'm not gonna waste time with that. Okay, so the Canadian, we're going to be fairly bearish as long as it's below the 98.94. Last but not least, so this is going to be neutral. The last one we're going to look at is the New Zealand. The New Zealand is pretty much very strong, and it's actually one of the strongest currencies out there. It's actually stronger than the Australian dollar, and you can see that the sell-off that we had on Friday is technically very normal. It's an accepted sell signal. You can see that we had over 6 days of upward momentum. We had the profit taking coming in on Friday, and that close, as it says, is actually a buy signal because it came below 2 daily high above the previous daily low. So that has triggered 2 sell signals, and that close is kind of a decent close. So we're going to be positive on the New Zealand. So with that said, the way we're going to plan our trades is as follows. We're going to be positive on the New Zealand. Okay, that is the strongest one so far. The US dollar. The Aussie, we need to be kind of positive about it. The euro, we're going to be kind of neutral. The pound, we're slightly negative. The euro, we are. So again, it's not going to take much effort from us to stick with the Japanese yen pairs. We're going to look at them, but we can also, the pairs that we want to keep is the Aussie yen, the New Zealand yen. We want to keep also the dollar yen. The $3 are the ones we are going to keep. Also the CAD yen. So all the dollar based, the New Zealand dollar, the Aussie dollar, the US dollar, and the CAD dollar vis-a-vis the yen. We want to look at that. We can also look at something different. We can look at the euro pound. We can also look at the Swiss pound. Going long the euro pound or going short the pound Swiss. We can also look at the pound New Zealand or the pound Aussie, or we can take a look at shorting one of the pound pairs. Okay, so that is the index. Let me save that. And if anybody has a question,